Hey, it's Clay Trader, and this will be a video chart on DIDG. Before we get to the actual chart, though, I do want to point out that the company did put out some news this morning. So if you go to Yahoo Finance, Google Finance, wherever, pull up the news release and check it out. And just keep that in mind as we go through the chart. So here we are, and the first thing I want to point out is a technical pattern that we have, but also just point out, and I don't mean to state the obvious, but the bottom has been found. And if you're not sure what is causing me to say that or make the statement, you can see here that about 4 days in a row the price bounced right around the 14-15 cent level, and then from there the price has been bouncing upwards. And then this is what also gives us our current little short-term technical pattern, our little pennant. So let's draw our flagpole here. Actually, we'll use a different color, and then we'll have the resistance portion of the pattern right here, which is at 29 cents. You can see that of the past 5 days, 3 of those days has bounced off of the 29-cent level. And then our support trend line, you can see here, there has been higher lows. So that just is illustrating that over the course of those same 5 days, there have been those higher lows. So we have our pennant pattern here, and then this is what really kind of sets up the chart and shows the great potential and possibility within the chart. Because with a nice break of this, there's really one little minor speed bump, and then after that the chart really enters into kind of a broad range before the next resistance level. And that's exactly what we want to see on breakout charts. You don't want to see a breakout happen and then have 15 million other resistance levels. You want to see a breakout followed by maybe a couple other resistances, and then you want to have resistances far apart from one another. And that's exactly what this chart has within its setup. So I already talked about the first level of resistance, which is up here at 29 cents, and that's just the top portion of this pattern. And then the next one is going to be right here at this purple line, which is the 50-day simple moving average. That's valued at 32 cents. And then this is where it becomes one of those things where you have a couple of resistance levels, and then they really begin to thin out. And we have a major thin out because the next level after that 32 cent is not until up here at 45 cents. And hopefully it's obvious that I'm not just making up this resistance level. All you have to do is go back through the history of the chart, and you can see that multiple times. I'm not going to count the number of days, but you can see a ton of times the price tried to bounce up and get through this 45-cent level. So this is truly indeed a level of resistance. And after 32 cents, you can see a very big space between resistance levels. And like I said at the beginning of the video, that's the type of setup we want. Get through a couple little resistance levels and then have a lot of room to potentially run. And then again, it's not like it has to stop up here at 45 cents anyways. I'm not saying that has to be the case. I mean, it could go beyond there obviously and go up as far as the momentum or whatever wants to take it. But the point being, just from the technical perspective, get through these levels of resistance and then have a lot of room to run. Also want to point out that during this consolidation period, volume has dropped off nicely. As any textbook or Google search will tell you, during consolidation patterns or portions of a pattern, you want to see a drop off in volume. So from strictly a volume analysis standpoint, this is exactly what type of action you want to see here. So with then increase in volume and start to get some bigger volume bars, that's where there could really be some potential. So nice little consolidation volume here with the volume drop off. So that's exactly what you want to see. In terms of supports, we have 24 cents as the first level of support. That comes from simply our two shorter term moving averages. That gray line there being the 20-day, and then this blue line being the 10-day simple moving average. And then if we scrunch this up a little bit more, you can see, looking down right around here, we'll call it 22 cents is another level of support. So 24 cents, 22 cents, those are the two levels of support on the chart that you'll want to watch. But again, with the breakout of this pattern or pennant pattern, which seems to be right around the corner given how well it's been holding up and consolidating, get through that 32 cents, and then 45 is the next pit stop according to the chart. And after that, I'm not going to scrunch up the chart too much, but after the 45-cent level, then really not looking at anything until well up above 55-60 cents. So those resistance levels really do space out, and that's exactly what you want to see happen if you're looking for a chart obviously with potential, and I think that's what we all are doing. So if there are any other questions on the chart, please let me know. If not, again, this was DIDG. Thanks for listening.